what does it mean for crypto in my mind is that it would probably eventually kill the business of stablecoins, because that is currently basically what stablecoins are. They are a flight to safety in terms of volatility in risky assets, and they are a very convenient means of payment. And more companies that are not crypto companies are adopting USDT to do cross-border payments.
Uldis, thank you very much for taking the time to speak to us today. It's great to meet you. Before we start, please just briefly tell us who you are and what you do.
Yeah, my name is Uldis Tēraudkalns. I'm CEO of NEXPAY. And NEXPAY is a payments platform or a payments provider for digital businesses, working for many years in the digital asset space, and also working with other companies that are, let's say, less banked or underbanked, and can let's say grow and appreciate more modern services than the traditional banking offers, and also safer to an extent. I guess we can talk about it later as well, how EMIs compare to banks.
Okay, so you talk about modern services and safer ones. So what is the core problem that NEXPAY is solving in the market?
Well, first of all, it's access to the infrastructure and financial services. I think there's an increasing number of companies that face problems operating, and obviously we cannot provide help to all of them. But there are certain types that we understand well, that we choose to work with, that we have built safeguards around, that we have built competence around to be able to provide the service. And it's not just about starting to work together, it's also about continuing to work together. And in order to have a long-term relationship with a business that is not as simple as, selling ice cream on a corner, then you have to have very specific competence, training, tools to be able to effectively work with that and manage that. And so I think that this service has been the key reason why we have been able to build the business that we have built, because at the end of the day, it is quite a commodity service. Financial services, you get a bank account, you get a internet some wallet or internet banking facility, you get payments in euro, you get payments in other currencies, in Swift, and you can manage your business as everybody has to. And there's thousands of providers in the space. So I think that in financial services, and when it comes to money, it is about who you trust. First of all, who you trust not to lose your money, or not to risk with your money, or not to mistreat your money. And second is who you have an understanding, a good working relationship with, that you have shared values, you have shared kind of understanding about the level of AML and compliance that is necessary to run the type of business that you're working, and it often it is kind of as a matchmaking. It not all clients and all financial institutions are a match to each other, and I think that helps specific focused niche companies really grow and thrive and make significant businesses in the space.
All right, I think you mentioned something really interesting, which is that there's thousands of providers in the market, and I agree with you that not all of them are the right match for all customers. Now, we know that initially banks were a bit reluctant to adopt these banking as a service models, mainly because they like to do things in-house, because the Secrecy Act and the security element meant that they wanted to keep the tight control over all their infrastructure. So the question I have for you is, as things have evolved now, who are the main clients of banking as a service services? Is it still banks we're talking about, or has the customer base diversified?
Well, banking as a service is a very wide topic, and I think that there's a lot of different ways how it is understood. It can range from just having some virtual IBANs and giving the kind of sense or illusion of banking services being provided by a certain business or platform. Or it can be a full white label where you actually have, fully functional accounts, full onboarding journey, all kind of AML and compliance handled by the platform that you are engaging with. And I think that there's not that many very well working models out there for that latter, full range. And there's plenty on the former. And I think, at least my experience in the space has been from day one. We launched in early 2019, and I think within the first months of operation, I received client inquiries. Can we white label your business? Can we issue IBANs for our clients on our platform? That has been there from day one, and so I think a lot of platforms that especially that have like a financial aspect to them are very interested in that. So we're talking all kinds of fintech platforms, many also crypto service providers, wallet providers, brokers. I think many of them are interested to give their customers a bank-like experience on their platforms that they are used to, that they would see an IBAN, that they would be able to make payments in the traditional world. So I think there's a lot of demand for that. The problem, as also the cases of several players this year show, is that it's not that easy to implement. And quite big companies have gone into quite big trouble for that, not being able to actually fully control and understand the end user and the end customer of those banking as a service products.
Right. Okay. And let me then pick up now on the crypto element, because we know that cryptos have really changed the way in which we think about money and about capturing value. In your view, what is the most significant change that the economy has experienced as a result of the introduction of cryptos?
I think the main change is a philosophical one, and it is in some cases it is action, in many cases it is an idea, and the idea is that money and state does not have to be connected, which has been for quite a while. Of course. State money, dates back hundreds of years, and there were more types of hard money, backed by gold, and other types of hard money. And then in the second half of the 20th century, we moved into this fiat world where money would be basically completely controlled by the governments. It would be backed by the credit of the governments, not by any kind of physical assets. And we went into this, completely unquestionable state that money is the one and the same as the government. And I think what crypto introduced is that it doesn't have to be, is that there can be also decentralized financial systems that are run by the peers, that cannot be fully stopped or controlled by any government, and that are truly global. And I think that idea is extremely powerful, and that has made a lot of libertarians rich, because they were obviously the first ones to actually flock to this idea, because that was their identity, what they were looking for all along. But I think as years go by, more and more people realize that it's not only about independence from the governments, but also from the traditional financial systems that rarely people understand. They just take them for granted. And I'm not saying that I understand the traditional financial markets fully.
Right.
or actually even money. It is such a complicated concept that that's it's arguable whether you fully understand it or not, even after so many years in the industry. But I think that this idea is creeping into people's minds more and more often when they see all kinds of crises, when they see Wall Street going crazy on all kinds of risks that it's taken and then being bailed out by the governments. You see that these national debts increasing forever and ever, and that makes you ask the question, is this sustainable? Where will this lead?
Now let's go back to crypto, because we talked about the philosophical nature of cryptos, and we talk about the separation between government and money. And yet what we see is that central banks are pushing very, very strongly for the adoption of CBDCs around the world. And there's a digital Europe project ongoing where they're still debating whether Europe needs a digital currency. In your view, how is this sort of what seems to be like a bit of a confrontation between CBDCs and cryptocurrencies? How will that affect the ideology behind decentralization that gave birth to crypto?
Yeah, this is a good topic, and I have been actually posting some thought leadership on this topic quite a few occasions, because there are several aspects to it. First is why do they want to do this? And I think that when it comes to at least the Western world governments, I think it's but probably in most, I think it's all about maintaining control. That they see that there is this new thing, this crypto that they didn't want and that they wouldn't want, and I think that the current system is working pretty well for them. They see it's coming, it's growing, and there's no way around it. So they have to have an answer for that, because you cannot just say, okay, you have this new technology, we prohibit it. I mean, it's way too late for that. It has become way too big. So what they can do, they can offer an alternative, right? So that's one aspect. Second is how fast do I think that is going to come to the world? I think it's going to be very slow. I think the earliest adopters will be countries that are less democratic, that are more either authoritarian or opportunistic, or both. Because I think that one of the things that Bitcoin maxis and the libertarians are most concerned about, and also more let's say regular people, is that the CBDC will have then to put absolute control in the hands of one institution, because currently, yes, the central banks run the system, but there's thousands of banks involved, so there's hundreds of thousands and millions of eyes and hands and minds that are involved in this process, and it is to some extent decentralized in such a meaning. But if there would be a central bank run digital currency that is operating, for example, similar to an Ethereum-based smart contract, then whoever controls the smart contract controls every single transaction, every single account balance, all of the history, and basically has unchecked power of all of the transactions, of all the wallets, of everything. And today it's not the situation. So that's what it makes it appealing for authoritarian countries like China, for example. I think, and the other one is like a bit of these opportunistic countries that want to make a name for themselves in the world for something. Like you could see the example of El Salvador with the Bitcoin adoption as the legal tender, because they also have quite authoritarian regime. So there's not too many checks and balances, there's not too many opposition. Not too much opposition for all kinds of new initiatives. The leader is looking for a way how to put his country on the map, and there might be more cases like that. While in the US, in European countries. There's, hundreds and hundreds of years of experience with checks and balances, with democracy, and with also state-run money. That I think that, and there's all kinds of risks and opportunities that this brings, that it will take a long time for the US or the EU, because EU is not just one, it's just 27 governments that have to agree. Okay, Eurozone is a bit less than 27, but still quite a few, more than 10 countries have to agree on this. So I think it will take a long time. And finally, what does it mean for crypto in my mind is that it would probably eventually kill the business of stablecoins, because that is currently basically what stablecoins are. They are a flight to safety in terms of volatility in risky assets, and they are a very convenient means of payment. And more companies that are not crypto companies are adopting USDT to do cross-border payments. So USDT is quite opaque. There have been many speculations about its reserves, whether it's real or not, the backing, etc. So if you will have a alternative provided by the U.S. government or by the European or by the ECB, I think more people than not would prefer to use that than a currency that is potentially backed by dollars but run by one private organization, and who knows what they're doing with it.
Right.
I think that the stable coins are the ones that are at the highest risk of becoming obsolete if CBDCs come.
So does that mean that CBDCs do have a place in the economy, replacing the utility that stable coins have, but not replacing so the other benefits that cryptocurrencies in general present to users?
I believe so. Yeah, I believe so. I mean, what are the benefits that crypto provides? So in terms of payments, it provides speed. It provides also cost. In some cases it's costly. In some cases it's not. It depends on what do you compare it with. And it also provides some sort of sovereignty to the user, right? You don't have a bank account that is operating your transfers, for example, with your trade partner, but both of you can have self-hosted wallets, and then you are completely in control of your funds. So those are the three biggest reasons in terms of payments and trade. So can those be replaced by the CBDC? Probably. Question is about the sovereignty factor, but then again, Ethereum blockchain is also run by a centralized entity to a certain degree. So, and there have been cases where they have made alterations in the transaction history for benevolent reasons, hacks and things like that. But they could also do it for malevolent, if they can do for the former. So in terms of payments, I think that there is a big chunk of the market that could be taken by the CBDCs. But there's a whole array of other applications of crypto, starting with Bitcoin. I don't think that Bitcoin in any way compares to a CBDC. They cannot even be mentioned in one conversation. I don't think they will have any single, or maybe one trade that they will have in common, that they will be on a public ledger, but that's basically it. Everything else is completely different.
Right. Okay, so we're talking about diametrically opposed concepts here when we talk about CBDCs and cryptos like Bitcoin.
Yeah, for sure.
All right, and now I'm also curious to get your take on how is MiCA going to impact crypto exchanges and other crypto-related services.
Profoundly would be my comment. I think there's two things at least that are to be talked about here. One is the impact on the companies, and second is the impact on the market. So impact on the companies will be very clear. It will be a massive filter for companies, because there will be not just money requirements for capital, which disqualifies a lot of opportunistic projects and a lot of small projects. If I'm not mistaken, 350,000 euros will be needed for the capital, similar as EMIs. So that is already a filter in itself. But then there will be also a massive regulatory burden that the companies will have, because today the companies in the crypto space in Europe only have the AML requirements, but then they will have all other compliance requirements that banks, not all that banks and other financial institutions face, but many of them, like information security, market integrity or anti-market manipulations and custody requirements and all kinds of things that these companies that are smaller are not used to. Probably the biggest players are already self-regulating to a higher degree there, in data protection and all of these aspects. But the smaller ones will have quite a bitter pill to swallow, and I think that it will just also decrease the amount of new, the speed of new company formation, because it will be, very expensive to start such a business compared to today, when you could have run it quite cheaply and simply. So it will be quite a big shift for the companies. And for the industry, I think it will be very interesting to see which countries emerge as leaders in the space, because currently you have had several countries that were doing very well in attracting the companies, either with ease of doing business or speed or cost. But those were not passportable throughout the EU. So they were like kind of gray zone. Either company would have to seek 27 registrations, which is a nightmare. I don't think that there's many companies willing to do that. You can of course go just for your few key markets, or operate in some kind of regulatory gray area, and that will be clarified by MiCA, because that will be passportable. So you will have to choose one country to get licensed, and then you can passport it in all of the EU. So that will completely once again shift the board or the chessboard of the jurisdictions in Europe.
Yeah.
Because the ones that will be the most fast, the most successful, the most seamless in the implementation of MiCA will be the winners, because companies will flock to there, because it has shown also for EMIs and the previous waves of crypto regulation that companies are extremely agile and willing to move across borders to find the best regulatory regime for their business to operate. So looking forward to see which countries will emerge on top and will become the new crypto hubs in Europe.
Really fascinating. I guess we'll have to see, but there's lots of exciting things happening in the crypto space.
Indeed.
And okay, Uldis, just to close, tell me a little bit about the vision for NEXPAY.
Yes. So what NEXPAY has been doing from the first days is that it has tried to combine kind of the traditional world and also the new world in terms of digital assets. So obviously MiCA adoption will take us and also many other companies in that direction, that you could consolidate, providing services or one-stop shop for companies to be able to run their treasury fully in one place. You have to receive a payment in USDT and make a payment in Euro. No problem. You can do it with us. And we want to become the premier provider in Europe for this kind of merged service, and of course primarily still focusing on the industries like digital assets, because also what I philosophically believe is that we have to give all the opportunities for the people and the companies to get their access to the crypto world. And the best way to do that is actually through B2B, right? Because if we go B2C and try to reach each individual directly, we can only reach that much, and there's only a handful of companies that have like a truly global or truly pan-European reach and can reach millions of people.
Yeah.
But if we can support other platforms with the infrastructure that is needed and them operating in their own markets and reaching all of these people, then I believe in that way we are serving our putting in our honest work into the democratization of financial services in Europe and eventually around the world.
Right. Well, that's a very bold and very inspiring ambition to have. So it's great to hear that. And Uldis, I just have to say that I've learned a lot by listening to our conversation today. So thank you very much for taking the time to speak to us today. I'm sure our audience will also very much appreciate it.
No, thanks for inviting, and obviously I can speak about these topics quite a lot, so quite an easy choice there.
Yeah, I can tell that you're very passionate about this. So once again, thanks a lot, and it's great talking to you.
Thank you very much.